Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and an update to our 2021 portfolio, already up 32% and we're just getting started on the year. We put on shares of energy and financials at exactly the right time, but today I'm adding 3 more stocks that could take this portfolio even higher. In this video, we'll review the 9 stocks already in the portfolio, stocks with gains as high as 58%, and why I think some of these can keep going further. I'll then reveal those 3 stocks to buy for January 2021 to add growth, value, and dividends to your portfolio. If you haven't checked out the Stock Card platform yet, I'll leave a link in the video description below. I've been using it for about 4 months now and love how it simplifies some of the ratios and the fundamental analysis that we talk about here on the channel into these easy to understand stock cards. So use the link to check that out and follow the 2021 Bowtie Nation portfolio. It's free to follow and you'll get notifications anytime I buy or sell from the list, even before these videos come out. As a special bonus though, I've negotiated an exclusive discount for everyone here in the community. Use the promo code BowtieNation for an exclusive discount beyond the free trial. I know you want me to stop yakking and get to those stocks, but you know I've got to send one last shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. But here we are on stockcard.io, and to see the portfolio, just go over here to the stock picks in the menu. That's going to take you to the portfolios and scroll down here to our 2021 Bowtie Nation. Here's the portfolio page and you can click this bell to get email updates anytime I buy or sell from the portfolio. It's totally free to follow and get those updates, and you see we're posting a 32% gain in the 2 months and beating the S&P 500 by 27% so far. Now I want to update you real quick on the current portfolio, show you what's in there and why before we get into those 3 stocks that I'm adding in January. Citigroup, ticker C, was one of our first stocks added in October, and all you out there in the nation know I really like the financial sector for 2021. In fact, I'm also adding another bank stock today. Citigroup offers a great mix of that capital markets business, which has really done well this year, plus the commercial banking side of the market that's lagged because of that interest rates, but could rebound next year. Shares are already up 34% and pay a 3.4% dividend yield. Another one of our early picks here, and one of my favorites, CVS Health, ticker CVS. The company has had a tough time over the last 5 years, but this is a great value play, trading at just 11 times earnings and pays a 3% dividend yield. CVS has already started distributing the COVID vaccine, and that could be a big boost to those 2021 earnings. That, combined with the fact that the company has a lock on the healthcare distribution system in the United States, I really like this one, and shares are up 16% since adding it. We added shares of Anthem, ticker ANTM, last month, and while it's up 13% in that time, it's not beating the market like these others, so that's a little disappointing. Still though, the company is an excellent pick in healthcare with its Blue Cross Blue Shield partnership, and it's trading for just 13 times earnings with a $360 per share analyst price target, so another 16% potential from here. Another stock we added last month, utility provider First Energy, ticker FE, and this one is another one that's just kept up with the market but could have 20% upside if the company can clear up some of the recent legal risks. It's paying a 5.2% dividend while we wait, and that stability in utilities cash flow, so I'll hold on from here. Here we added IMCOR, ticker EME, on that rebound in commercial services and the shift to green building. Shares have jumped 30% since then, beating the market by 24%, and the company just announced last week that it's boosting the dividend by 63% to 13 cents per share. This one is right around the target price though, so I'll have to reevaluate if we want to keep it longer or sell and take those profits. So make sure you've got those updates set to get that notification. We added shares of Lyft, ticker LYFT, early last month ahead of that rebound in services. I probably should have held this a little bit longer. I took profits after that quick 42% jump in the shares, and they've continued to run another 35% since then. I still do like the long term in Lyft, especially as self-driving becomes a reality, because I think it's very well positioned to take advantage of that. Sometimes though, my inner value investor just takes over, and it's tough not taking profits when a stock runs 42% in less than a month. Now, all you in the nation know I started watching energy stocks early and think this is one of the best sectors for the coming year. Shares of Diamondback Energy, ticker FANG, was one of the first added to the portfolio, and it's up 57% since then, beating the market by 52% over that period. Diamondback has one of the lowest cost structures in exploration, and I think this one keeps running, so I'm going to hold it in the portfolio, probably around $55 or a $60 a share target. We added shares of Devon Energy, ticker DVN, around the same time, but I sold this position after that 54% return. Shares are up another 10% since then, but it's getting really close to that fair market value, and I wanted to cut our energy exposure a little bit after that massive run. Basically, just in case energy stocks come back down, we aren't too overexposed in our portfolio. Renewable Energy Group, ticker REGI, was one we added last month, but where I also took profits pretty quickly. Again, another one that I do like the long-term potential in the company and wanted that exposure to renewables for 2021, but the shares are up 193% this year, and we booked a 30% return in less than 2 weeks. So again, my value investor spidey sense tingling just a little bit. So that's where we're at so far with the portfolio, but I wanted to start the year with 3 more names. 3 stocks to buy that are going to give us that growth, value, and dividends in the portfolio. For our growth pick, United Microelectronics, ticker UMC, the world's second largest semiconductor foundry for chip makers like AMD and Xilinx. Now, most of the names in the semiconductor space have had a really good year. The iShares Semiconductor ETF, that's ticker SOXX, it's up 46% since January, and it's all in that ramp up to 5G and the Internet of Things technology. Just an explosion in the demand for chips and those RF filters that manage the networks. But I've been researching a trend in the market recently that makes me think one segment of the semiconductor space, one part of it, could continue to surge higher. Now, that demand for chips has caused a shortage for the components, but especially in the 200mm wafer size. Now, a lot of the high-tech demand has shifted to the newer 300 and even 400mm sizes over the last couple of years. But a lot of your IoT, that's Internet of Things products, and 5G are still built on those 200mm wafers. But because most of the chip makers transitioned their fabrication to those larger, newer wafer sizes, that's left a ginormous shortage in the smaller ones and an opportunity for those with production capacity in that 200mm size, like UMC. Now, I actually did want to add Semiconductor Manufacturing International, that's ticker SMICY, because the stock hasn't surged as much as a lot of the others in the space. But that one's on the Chinese company's restricted list, so that does concern me. While I think those restrictions come down eventually, it may not happen in 2021, so I'd rather be in something like a UMC instead. Shares of UMC are trading above 30 times on a price-to-earnings basis, but actually below the average for the semiconductor industry. The company has a great balance sheet with more cash than it owes in debt and grew free cash flow by 85% over the last 12 months, so lots of financial flexibility to reinvest and still return cash to shareholders. For our second pick here, a value stock, I'm adding Wells Fargo, ticker WFC. Now, Nation, you know financials is one of my favorite sectors for this next year, and the Fed just confirmed it with an announcement last week. So the Federal Reserve said it's loosening its restrictions on banks, allowing them to start repurchasing their shares again after prohibiting it in that last stress test. And the last stress test was one of the strictest I've ever seen in more than 20 years in the markets, even worse than anything we saw in the financial crisis. So a lot of the banks just got hammered in that. But now, not only are those banks being allowed to free up some of that capital and return it to shareholders, we just got a new stimulus deal that's going to help more businesses avoid those loan defaults. We've just got a better economic picture. Now, if we get rates up just a little higher next year, it's going to be a very, very good year for the banks, especially those commercial banks like Wells Fargo. Shares are trading at a price-to-book value of just 0.75 times, which is a discount of 42% from the 1.3 multiple where it traded just last December. The bank has put aside $10 billion in loan loss reserves, more than double what it held last year, and I don't think it's going to need it. I think by the third quarter of 2021, at the latest, you see the banks moving some of these loan loss reserves back into the income statement and some huge upside earnings surprises. Next here, telecom giant and dividend leader AT&T, ticker T, for its 7.3% dividend yield. Those of you in the nation for a while now, you know I haven't been a fan of AT&T's acquisition strategy over the last few years. They've basically been on a buying spree to create a complete media and telecom empire, but I really don't see a lot of the synergies between these segments. Management is making some good strategic decisions now, though. The valuation is good at 8.7 times on a PE basis, and that dividend just keeps on coming. The studio segment, Warner Brothers, announced that the entire 2021 slate is going to be in theaters and stream on HBO Max at the same time. It peeved off a lot of the cinema operators, but I think it was a smart move that gets the company back to making money on those movies instead of just waiting for the theaters to open. Now, the dividend here hasn't grown a lot recently, just a 2% annual increase over the last 3 years. But it's hard to beat that 7.3% yield. The 5G rollout should benefit the telecom side as well as the streaming business, so some upside catalysts over this year and next. The company has paid down $5 billion in debt this year, so relieving some of my worries around that too much debt from the acquisition strategy. Click on the video to the right for the 5 oil and energy stocks to buy for 2021. Energy is expected to post the highest earnings growth over the next year, and I found 5 stocks to win. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.